Right, jet setters. So, end of the week, Sunday night here in Australia, or Sunday evening. So here's what I do when I, trying to make sense of the week. I look at what things stand out to me, and here, bang, that is. Let's get that right. That is clearly the first thing that stands out to me. Second one that stands out to me is this. Third thing that stands out to me is this. Fourth thing that stands out to me, of course, is, this. Which if we go back to a longer time frame, takes us, of course, all the way back down to here. So they're the few things that just stand out to me straight off the bat. What do they say? Right, so I guess in no particular order they say the trend is still broken, it hasn't resumed. They say that it is a potential double top, but and that the first leg or the total leg of this down move is broken. Right, so it says that's broken, this is a critical point, and it says that this as a target for me never met. All right, that's what it says. When we just look at another thing we like to look at is the Fibonacci's. If I look at it backwards on this one, look at that, right? so I've always been a bit skeptical this move and really how far we've come in relation to that. We're actually bang on twice that, which is frankly quite incredible, right? This move down, we have recovered twice that move. Massive move, to say the least, right? Obviously that, retracement, if we kind of look at the other way around, I say, right, we haven't come to first base. And that target I had in mind is, I guess, like that's first base for this whole move. So when I do my first impressions really is that this is looking a little bit iffy. I find it interesting. Let's have a look at the candles. Yeah, right. Well, there we go. Hey, that is a very interesting candle. Particularly after these 1, 2, 3, or 5 days, 6 days of massive buying, that we've finished the week on something that is bang on the high and really is a bit of a deliberation. These things can be classic turning points, obviously not always, but to me that and this is a little bit smelly, so to speak. Let's have a look on the 4-hourly. Right. Now we can see on the 4-hourly, if we just finesse these a little bit to take into account, this line, it's always been a bit messy. It was never really a nice downward trend. But when we look at this and the highs, whoa, we can see right on that ding dong, that's pretty much right where it turned around. That's telling to finish the week. Very heavily overbought. Negative divergence. So we've got a few things going on here. I'm out of my short positions on this one. That rebound that took out my stops there. That was the level at 44.80. You can see it bounced back through and then shot through. So that was a sensible stop. Having said that, I'm a little bit disappointed that it didn't go further the way it ought to. It hasn't been very well behaved. Now this, I haven't got on here the volumes, but the volumes have been a little bit weak here. And to me, this rally, just the way it's unfolded, I mean that heavy vertical action with only just that tiny little pullback at that level, that to me, given with a combined lower volumes, that speaks to me of stops, of short covering rather than new money. So to me, I'm a bit skeptical this move up. I think it's built on sand. for a couple of reasons. Heavily overbought, right? That doesn't happen very often, this, right? Due for a pullback, happened there. It might not be a particularly big pullback, right? But certainly due for a pullback, I would think at least to there. I think that this, although it's busted, wasn't that a convincing trend to start with. I think that this upward trend has certainly not been tested, so it could go up here. The double top here to finish the week is kind of telling that it didn't shoot through, so to me it lacked a little bit of conviction. The other thing that I've been looking at, for me the big markets are the equity markets, the bond markets, right? They're the two biggies. The next ones that I've been watching are the currency, the Aussie currency, and then gold. So I'm going to run through those. When I look at the Aussie market, it hasn't regained the highs of the US market. So my first impressions of this one is right. 1, 2, and I think third one for me is actually, what is this retracement? We'll kind of look in the 4-hourly to see what that is. I guess the other one is here, where on that measure the Aussie market did kind of meet a reasonable target to pull back to, which also coincidentally is remarkably close to that. Let's have a look at how the candles, you see there. Let's have a look at it on a 4-hourly. So the Aussie market has been a bit better behaved in terms of these technicals. So it's certainly, well, it has kind of busted through that 61. It's like caught in a little bit of no man's land, to be honest. This is a very important level, I would say, though, in my mind, where if we take it to the dong, where that 78 retracement coincides with a high here. To me, that's a bit of a red line in the sand for the Aussie market. For me, the Aussie market still looks like a good candidate to unfold lower, in that it certainly hasn't had the strength of the US market and has lagged the US market. Where would it go to? 6,900, somewhere in there. Yeah. Even when I look at it again, I know I've seen these lines before, but even when I look at it again, these things are still pretty compelling for it to pull back to that. You can see there was not a lot of price action in there. That, to me, being a betting man, which I am, that's still a target. I think that this has still got potentially further to go. It's not as heavily overbought as the US market, but it is showing negative divergence. Look at that, it's had 3 stabs at that level, hasn't it? What's that level? 74.20. Yeah, you can see through there was a bit of a noise around here, this level here. Bit of support there, bit of resistance here. So that, to me, is looking like, similar to the US, it's finished the week at quite a critical level. Yeah, interesting. So I guess similar thing to the US. The uptrend hasn't resumed. The downward move was broken. Let's just clear that up. It was broken. It has stalled a little bit. The Australian market somewhere between the 61 and the 78 retracement. The US market right at the double top. Now, one thing that I find a little bit weird about these markets at the moment is there is a lot of money in bonds, and the bonds have been on the move, and they have been trending higher in terms of yields. And the funny thing is, right, just as the S&P is back at record highs, the US bonds, these are the 10-year treasuries, right? They're obviously not kind of record highs, right? But when you look at this price action in the US bonds, which has basically done, that, and let's do a little curve here, like that, that is the same as the S&P, right? It's certainly not, not dollar for dollar, right? But in terms of it having a strong rally and then a dip and then a rally back, that's the kind of same action. Now, the thing that I find a little bit crazy about that doesn't add up is these rates are not good for equity valuations. They are a sign of things to come, be it inflation or Fed tightening and other central banks tightening. And the same kind of price action from here, for these bonds to be coming up to breaking quite an important point here is not in harmony, shall we say, with what's going on in the equity markets. Now, the other thing that's interesting is not just the long end, the short end has started to break. So when we look at the 2 years, this is what's happened with the 2 years. So this is back at the beginning of the, when everything went crazy. And here, my first impressions are these have got more to go, right? There is a big level that has been broken here, around about 30 points. And it has done a very stock standard up, back, and off little routine, a little kiss goodbye. So we'll see you tomorrow. And really, that could easily go like another 100 points. These gaps, this size, like in bond yields, they really have a habit of refilling. And when we look at it going back, the long term, this is where we are. It's been coming down. We've hit like a floor down here. And this move, which looks significant, right? In the scheme of things, it's not. And it really could easily, on a technical basis, come back and retest this level. See that one there? This is what bond rates do, right? You'll see it more clearly on the 10 years. They come down to a level and they recalibrate, right? And they come back and they kind of do retest these ones. That, to me, looks a pretty compelling target up here for it to say hello, welcome back to. So the US bonds have been on the move. When the equity market rallies back to all-time highs, when this has been happening, to me, it does not add up. Let's have a look at gold. And gold's an interesting one because on one level, higher rates are good for gold. On another level, higher rates are bad for gold, right? They're bad for gold if the rates are all about inflation and inflation getting out of control, then obviously it's bad. It's good for gold, right? Like, gold rallies in an inflation kind of, environment. The other side is if the rates are just going up and normalizing, a bit of inflation, but not totally out of control, then that's probably not good for gold. And I think we kind of see that in the price action where we've got a bit of, on one reading we've got this, right? which I've shown before, is a remarkably similar bearish pattern. I've still got it on the chart here. A remarkably similar bearish pattern to here, right, back in 2011 to 13, where we had a bit of jubbing around, at a level, shot up, some lower lows, bit of a last shot at all-time glory, and then it just falls away. Similar pattern, strong run up, the buyers not getting more aggressive in the scheme of things, the sellers getting more aggressive, the buyers eventually say, okay, have it your way. This is the same thing where we've had the buyers more aggressive up to a point, the sellers then they get more aggressive, and the buyers say, mate, look, we're staying put now, and the sellers have these patterns with the strong run up, they typically break down. You could do another reading where we say, look, like here, maybe it's doing that. I don't think that is as credible as the floor that is coming through this range here, and it is a range, right? To me, that 1770 level, that certainly provided some resistance and support on the way through. So that's, I guess, another measure. I guess another way you could look at it is there is a down channel that is still in play, but it's not that clear. It's a little bit messy, right? And when you look at that interpretation, I know there's been no end of people, the gold, the guys that just love gold and say it's going to a gazillion, they look at this and they say, this is your classic, cup and handle, and I don't really buy into that. That's what the cup and handle people say is going on. We've had a big run up, a big loop like that, a big cup, the handle, and it's going to break out and it's going to go through the sky. Look, a lot of people talk about gold going to gazillion, like they've been talking about that for years, and yeah, sure, it may well do it. But I do think that in terms of inflation, the market, they do look through these scenarios and they do price it in earlier than you think. And back here, which is in, we'll put it this way, when the whole shebang unfolded, right, it was down here, right, and gold initially kind of sold off. People looking for liquidity, right? So they sell that and they get their dollars, right? And then it shot up. And what did it shot on the back of? Not just lower rates, but also in inflation, right? They're kind of saying, well, look, lower rates, that's going to lead to inflation. And all the people who love gold, they go, well, there's a few things, right? World's going to end, buy it. Inflation's going to come, buy it. Lower rates mean holding dollars is useless. Buy it. US dollar becoming devalued because the Fed is printing more, buy gold, right? So there's a lot of factors contributing to that move. Now those factors are, they're rolling off the curve one by one, right? The Fed is starting to taper. They're not accelerating their program. Rates are tending to go up, fundamental. Inflation is still a risk, right? There's that. The flight to safety because the world's going to end, well, that's kind of over, right? So all those factors have been priced out, and the last remaining one for hang on to gold is inflation. And you can see that's really what's been going on here, as all these factors came in to boost gold, whether it's inflation, more money printing, lower rates, just the fear of the end of the world. 3 out of 4 of those have rolled off. Now, inflation still could give gold a boost, but it's going to have to be a pretty heavy boost to take it back from, up there, let alone sky high. So for me, I'm still of the school of thought that I think this is a move that is likely to go to the downside, but it is at this trend line will be important to watch. If I can get my chart sorted there. Is it going to do it? It's not going to do it. Let's go back to the daily one anyway. My God, never work with children, animals, or technology people. But we can see here it is right. It really did touch very close to, or right on that trend line, depending on where you want to draw it. Right on or very close to it overnight, and then couldn't hold it. So that's gold. I think critical area to watch there to the downside here. I had been short. I had been banking on it following through beneath this 1720-ish level, which it didn't do, so I'm out. I'm looking at shorting it again, though. That's gold. Quick look at the currency. It's the Aussie Deliro. Okay, first impressions here. Let's go back to it. Right. Key level broken. Backtest in progress. That's pretty much the story. Next target here. So that's 75. This does look a little bit more credible as far as a double bottom there. Technical target not hit. So I'm out of the Aussie. Like it, when it broke through one of these levels down here, that was it. Made my money and cashed it in. I'm not quite sure what that all adds up to. To me, it looks like it's on the way to 70, 75, 76. It's obviously been caught up in what happened with New Zealand CPI. That's weird because New Zealand's not Australia. We're actually different countries. And so the fact that we were caught up in their movement is kind of amusing. I want to get that out because that looks weird. But it... let's have a look at this. Wrong one. But that and the move in our yields has certainly helped the Aussie Deliro. Oh, there we go. Yeah, right on the 61 from this breakdown point. So it's a bit subjective where you do these ones from. The first place I look at them is really from the breakout point. I guess you look at the all-time high. Yeah, pretty close to that 50% retracement. Yeah, that level, 75.60, that does look, this looks like it's done its retracement actually. I don't know how the Fibbo guys would do the Elliott wave. 1, 2, 3, 4, probably 5. I think that's probably how they'd count it. Probably go this wave 1, to there. There's a 61 retracement, so they'd probably go, yeah, that's good. So 1, 2, so that's pretty good. Bit of a messy 2. Then they'd go from here and say, well, this is wave 3. Retreat to the 50%, that's good. No overlap between the 4 and the end of 1, that's fine. The 3 one, nice and long. That's not a bad trend line for a wave 4. The zigzag 1, 2, 3, 4, or whatever. I guess it's like A, B, C. That's probably what they'd say. So go 1, 2, 3, 4, 1, 2, 3 in your first wave, 2 there, bit messy there, coming down for 1, 2, 3, 4, 5 there, 1, 2, 3, A, B, C on the way back, coming down. Aussie looks to me like it's a sell again. I think I've just convinced myself to go short again. My God, who would have thought? So that's the Aussie. That's gold. They're the equity markets. And so for me, I'm skeptical of this rally this recovery rally when I look at it. I'm skeptical of the rebound in the Aussie. I think it looks like it's headed for another leg lower pretty soon. I think this, when I look at the RSIs on it, combined with that price action, is looking very compelling for it to correct. The weight of money from the Fed, obviously not to be underestimated, but the bond market never lies. You know, it's too big, too old, too much of a slow-moving dinosaur, and it's moved across the whole curve, not just the 10 years, but the twos, everything in between. Why the US equity market is back at new highs with those bonds breaking, I think it's been a little bit delusional, which is reflected in these lower volumes. I'm pretty wary of what is to come here. The other little coincidental thing, of course, is when we look at, look on the weekly, it kind of shows up very clearly. The 7 weeks back here, which is 1, 2, 3, 4, 5, 6, 8 bars, Well, it was seven weeks, right? Call it 8 from the 7 or 8. Let's do 8 from the ready. 7 from the red one. We're kind of there, right? we're ready for it. Actually, it was 6 weeks to the top, right? Look at that, there to there. It was 6 to the top. 6 weeks. And that's back in, literally those 6 weeks, 4 in September, 2 in October. And here it's done exactly the same thing. And then of course it had another sell-off before regaining. But I guess what we're looking at here was a similar discussion, back here, like in November, September, October last year, when we had this trend line, that had been broken, right? It had gone through, couldn't backtest, failed backtest, went down, 1, 2, 3 legs down, came back to, in this case, almost new highs, not totally, right? And then it sold off again to form a very clear bottom here. Little duo there. Now, when we look at what happened there on a smaller scale, we can see the same thing happened here, where we had this kind of rally up. When it came off, it formed another little pair just there, right? Oops, just there. And that's kind of what tends to happen in the S&P. When you have these like rising diagonals and they pop and they have like 2 goes down, right? This one, so it was another rising diagonal there. I remember when I was looking, I was kind of thinking, yeah, that's another rising diagonal. And I think I was drawing it like wiping out some of the noise. I was looking at it like that, saying, oh, forget that noise, right? This one had a pop, came down, had 2 goes there. Now, to me, this bottom here, it's never looked that convincing to me. It just doesn't look like a technical bottom. Like 1, 2, 3, yeah, sure. On the daily, you can say there's some negative divergence there where it formed a new low, but the strength was increasing. So on that one, I'm still not that convinced. And to me, 1, 2, 3, rolling over for another one. It just looks a little bit like this. 1, 2, 3, roll over, had another go. Shorting these markets is actually pure insanity, right? Let's face it. It's the kind of guy I am. So you know, if you're gonna short them, right? Just keep in mind that I said that it is insanity. But to me, I think that's what I'm going to do. So we'll see what happens this week. Let's just have a look on the weeklies. Yeah, you know, strong rebound. Obviously, a lot of buying action there. Really, obviously, like all these things could go either way. For me, risk reward is a bit off, having a tight stop and banking on it going down. Look, that's it. That's the markets for this week so far. Anyway, have a good one. We'll catch you later. Ciao.